Okay, it gives me great pleasure to welcome Ryan Swan from Think Money. And Ryan looks at things very much from a legal and regulatory point of view. Once we have everyone on the stage, I'll be asking each of the panelists to give a short introduction of themselves as well. Next, Vinita Rumtree, from HSBC Kinetic. And last but absolutely not least, Ibrahim Gadongu, a fellow banker from Standard Chartered. And Vinita comes to us very much from a regulatory compliance point of view. Ibrahim has more of a technical background. But before we get into the meat of the session, if I could ask each of the panelists in turn to talk briefly about what you do within your organization, and specifically what it's been like for you coming out of the lockdown and getting back into some semblance of, quote, normal work. So, Ryan.
Yeah, thanks. I'm Ryan Swan. So I'm Chief Legal and Risk Officer at Think Money. So we're a FinTech organisation providing digital current accounts to retail customers. So I suppose what I'm going to bring to the table hopefully today is a perspective of a more broader kind of risk and oversight kind of role in an organisation that supports consumers, but also from a proportionality point of view, we're not a huge organisation. We sort of have 100,000 customers, probably around 200 staff. So I think some of the things we're going to talk about today is the proportionality regulatory requirements and my kind of take on how I think that supports those kind of organisations. In terms of COVID, this is the first outing I've sort of been allowed out from home to come and see real people. So it's good to be here and talk to you guys. I think in terms of how we found things working remotely, I think we've adapted really well to that. We've kind of enjoyed it. We've looked at new technologies that support all our organisation, whether that's our people, our culture, or our customers. So I think timely kind of subjects in terms of some of the technology requirements and how they can support organisations. Excited to talk to you about it.
Okay, and Ibrahim?
Yeah, thank you very much, Richard. So, Dr. Richard, name is Ibrahim Gadongu. So I'm the head of Information Cybersecurity Policy within Standard Chartered Group. So at the moment, sort of my role is around looking at how we align our internal frameworks, policy standards, also at a technical level, compliance to regulatory requirements across our 60 markets. So a business sort of context is we are an investment bank, but a lot of sort of retail licenses that operate within emerging markets. So what I bring to the table today is just that broader view from a cybersecurity perspective, given all the deep dives that we do around attestation and preparing the bank just around BAU to make sure that we align with some of those requirements. So maybe back to your last question.
Yeah, I was going to say, because obviously you have more of a technical background.
Yeah.
And of course, banks were famously essential work institutions. So did you go into lockdown at all?
Yeah, so I think for us, we had quite a number of people maybe around some of the more regulated processes on records management or the front, like let's say, what's called banking services, not really working from home because they have to provide some of those services to our customers. So for myself, being in risk management, because I'm in the second line of defense, I worked 100% from home. So this is actually the first conference and I'm attending face-to-face with a lot of people. Quite glad to meet everyone and sort of, I will be looking to interact with all of you and exchange ideas. Yeah.
Great. How about you, Vinita?
So I work with HSBC Kinetic, and I'm slightly different to both my colleagues here, both my panelists here, but essentially, we were chatting about it earlier. You're both from second line of defense and I'm from first line. So I come in not so much from a cyber specialism, but I look after risk and governance overall. So risk and governance oversight, but working with first line. So the way I would look at it is almost some organizations have that 1.5 concept. But if you think about saying HSBC Kinetic is about creating a digital experience and having seamless, straight-through journeys for customers, how then do you ensure that you're creating something that's slick and modern, but also part of a legacy bank? So it's about finding that optimum balance and doing things right and still staying aligned. So I support there. And also more recently, besides my role here, I'm also looking from, since we're talking about compliance and everything, also about how can we leverage sort of reg requirements like open banking to then look into using that to make it more along the lines of open finance and matching up with some of the fintech thinking and say, what is it that we could do with the power of APIs and how should we be thinking about them? So there's a broad sort of things that I'm looking at, but it's fantastic. In terms of your question about the lockdown, I have, as I always say, I love lockdown, and I loved it more because I love writing. So I finished the whole novel in the lockdown, and I'm looking now to refine it. But that was one part. But I also love being back, and I'm going to the office pretty much every single day. So I was telling my friends I kick my kids out to school in the morning, and then I'm back in Canary Wharf every single day. I love it.
It's great. It's great to hear that you love writing. We don't have time to talk about the novel now, but I may well be emailing you asking for journal articles in a little while. But that's for later on. But to start with the agenda of this session, I'd like to start off with a general question to all three panelists. You all three have different perspectives. What would you say are the key governance and compliance challenges for financial institutions going forward? And sure, talk from the perspective of your own institution, but it would also be good to hear your views on the sector as a whole. So, Vinita.
I think the key challenge is, the way I'd look at it is looking at the entire ecosystem. So there's two parts, right? When you look inward, when you look into your organization, just the complexity. So for a bank like ours, as I was saying, Kinetic is one part where we've got 16,000 customers within Kinetic, but we're a part of a larger organization. So from a reg and compliance perspective, we've got to see how do we stay aligned. Because if you were looking at the regulator or requirements, then the requirements are not specific to one part. And you don't want to be creating duplication in the processes and, different units trying to solve for the same challenge. So it's about staying aligned. Like even if I take a simple requirement, right, saying open banking or cyber reporting requirements, you've got to figure out, when you look internally, that's the primary challenge. When you look externally, because you've got to stay part of the ecosystem. So when you look externally, I would say the key thing is really how do you then stay competitive in that external market as well. So you've got, sorry, my mic gone down. Is that okay now? Better? I'll hold it. Yeah, thank you. So, and when you look externally, it's about how do you stay competitive. So you've got to stay compliant. But at the same time, if you get too focused on the compliance and meeting the standards, but you're not competitive, then where are the customers going to be? So you've got to have that really good customer value proposition, but also then stay right from a reg requirements perspective.
Yeah, I think I agree on that side. I think for me, it's that risk kind of balanced approach. So for us, the compliance challenges, or for sort of organisations our side, the regulatory requirements, our team is sort of a team of 5, team of 6 in terms of tracking kind of all of that is kind of quite challenging in making sure we don't drop the ball there. I think from sort of a cyber fraud sort of security perspective as well, that third party supplier kind of risk in terms of how we know where our data is, how we know what they're doing with it, how reliant we are on those suppliers. And I think from financial institutions' point of view, the regulator as well is in terms of putting more pressure on understanding what that means. So I think that balance for me, as you kind of say, is, we'll come on to it, I think is using the resource you've got in the best kind of way to manage the risk that's relevant to you. And I think you can get too caught up in all the regulatory requirements as in rule-based approach versus actually looking at what are we trying to achieve, how are we trying to achieve it, how are we protecting our security requirements, how are we managing and delivering a great experience for our customer, but having that sort of risk balance kind of side. So I think there's that angle. I think there's also the angle around the people side, so in terms of the culture and how you're managing that throughout the kind of business from a regulatory challenge. I think people are more aware to that through kind of COVID and understanding different behaviours, but I think there's a longer term play there around people, whether it's how they want to work, whether it's how they interact, whether they career development opportunities. I think it's the softer kind of side of regulation that's still really important that businesses often forget. We're lucky in terms of a smaller workforce to be able to get around that. I think for larger organisations, being able to maintain that culture and that one voice all for the same kind of purpose and demonstrating that will be a challenge in the next few years.
And Ibrahim, how does it look from Standard Chartered?
Yeah, I think from our perspective, I really like what Ryan just mentioned there, just moving away from rule-based compliance and really looking at it from a principle perspective, because some regulators are now sort of focusing on operation resilience and the ability of organizations being very quick to recover services in case of a cyber attack, because we've seen quite a lot of that. Remember what happened with the SolarWinds attack, for example. And I guess from that perspective is really educating, I guess, board members, the senior management on what the bank really needs to do in those cases, what investments they need to make. But I think also reconciling that with some of the expectations across our different markets, because we have different sort of priorities for different markets based on the services that we offer there. So I think from my perspective, when we are looking at sort of those policies and how to uplift that next level maturity is how do we reconcile that with things like innovation and how fast the business has to present some of those services.
Absolutely, which brings us into the whole area of as products evolve, as new products come into the market, as more technical products come into the market, to what extent are they regulated, to what extent are they not? I loved the description that a past chair of the Financial Conduct Authority gave of the regulatory perimeter. He said, it's a bit like the coast of Norway. If you, from a distance, if you take a quick look at it, it looks like a straight line. But when you look closely, actually, it's in and out, and it's 10 times longer than you thought it was, and a lot more complex. Which brings on to a question that I'd like to ask you, Ryan, from a legal perspective. How do you think regulators and the banks could work better together than they do at present? Certainly, and feel free to answer this from a sectoral perspective.
Yeah.
I know, talking to other colleagues in the sector, for a while, I was a research assistant at one of the major city law firms. They still exist, so I won't say which one. And I learnt there that whatever the regulators say, certainly in the UK, there's not a whole lot of trust between financial institutions and the regulators. I think of not that long ago, one of my PhD students was doing research on AML compliance in banks. And she was looking at the UK, Nigeria, and Sierra Leone. And sent around an anonymous questionnaire on what the issues were, how well did they think they were doing. And not a single, by the time we'd finished, she'd written to every bank in the UK. Not a single UK bank replied. Number of Nigerian banks replied. Sierra Leone was really good, because the culture in West Africa was, okay, we're developing countries. We know you have limited resources. If we're satisfied that you are not taking the mick, that you're doing the best that you can with limited resources, then that's fine. Whereas the perception, fairly or unfairly in London, was that the Financial Services Authority, now the FCA, are out to catch people because they think it makes them look tough. Now, I'm not asking if that's the view of your institutions. I will tell you that is the view of a lot of institutions that I've spoken to.
I think in terms of the question in terms of how they can work best together, I think for me it's about education, it's about communication. So I think it's about businesses educating the regulator on some of these technologies and how these products kind of work a lot better so that they understand it. I think it's then businesses collaborating with the regulator and being more proactive in terms of how they work together through sort of regulatory reporting. I think for me, the FCA, you guys are probably aware in terms of the sandbox regime, in terms of that innovation. I think they've just opened that up. I think they're pretty. I find them pretty forward thinking in terms of how they think about that regulation. I think the data piece centres together in terms of the pain points that businesses have through regulatory reporting. It's bringing that to the table so that we can, as a community, both regulators and financial institutions, to say, okay, what is that kind of common goal? How do we strip that kind of back? I think the regulator recently FCA published a speech where they're talking about, yes, we're a financial regulator, we're also actually now a data regulator, because we get it, we understand that data centres around everything, whether that is in terms of how that business makes decisions, to your point, sort of Richard, how you stand behind that data and that decision-making process to say this is why we did X and why we didn't do Y, resources or whatnot. But it's getting them involved. I think, in my experience across my career, I've seen organisations that are pro-regulator and ones that actually will only tell the regulator if they come knocking. 100% without fail, the businesses that are proactive have a better relationship and have better products and better interaction. I think it falls down to those two ones personally.
I'd agree. I mean, in my experience as well, in my previous firm or even my current firm, the approach we've got is very, very proactive. So, and I find it very reasonable to kind of go out, and I find them very reasonable to be able to have like a dialogue to say, okay, here's where we stand and this is what we're coming with. So with Kinetic personally, we just launched in October last year. Earlier than that, we were in alpha, we went into beta, but throughout every single stage, we've stayed constantly in touch to say, here's what we're doing, here's where we stand, we'll be back, we'll tell you where we're going. So we were in very close partnership and, with several regulators just to say, okay, this is where the line of sight is, which also then gives everyone the opportunity to ask questions, to explore, to say, here is something I don't understand, or what could you do? And then even with during the COVID time, we used the app to have to provide to our customers like bounce back loans, access to accounts so that they could get bounce back loans. So I think it's a very collaborative thing to say what is it that we could do and how can we come together to do the right thing for people.
Okay. I didn't have time before the session to go into too much detail over background, but certainly both HSBC and Standard Chartered are global banks.
Yeah.
And wearing my SOAS hat, I'd like to try and get out of London for a moment. And in your experience, or in the experience of the colleagues that you've spoken to what extent do you think banks in London can learn and regulate, and the FCA can learn from experiences of other financial centres? To what extent do you think they can learn from us in this area?
I think, frankly, if I take my out of London hat on as well, so for my previous role where I was heading up conduct in Barclays as an example, or doing different roles, and I've also spoken in Sydney just because the regulators there were looking to benchmark the FCA on how they've handled conduct and non-financial risk management. So there's a lot where I would say the FCA is actually quite respected to say, or the UK overall, to say how we've taken on conduct, how we've embedded that thinking, and just how we're embracing or embedding non-financial risk management across the organization. So I would generally think that we're doing fairly okay. But of course, we were discussing in the room before, like globally the appreciation of what is good versus what is bad is different because there are cultural nuances to what is acceptable in a certain area. But that aside, overall from a banking culture perspective and regulatory relations, I think UK is quite good in that space.
And I think
I
tend to agree.
To put a slight nuance on it, in the experience of Standard Chartered having to work with many different regulators around the world, what perspective does that give you on how financial institutions can work better with the regulator or vice versa?
Yeah, I'm just going to say that I really agree with what Vinita said, that, within the UK, the regulator is quite well respected, but our bank is really large within the Asia's market. And we have things like, the group CISO and the CISRO within our second line is actually the chairman of one of the committees within the regulatory body there. Within associate bankers of Singapore, for example, or even with an advisory board within the MAS. Monitoring Association of Singapore, and that sort of partnership allows us to also contribute to the best practice that is being rolled out to the industry, and the regulators, they are quite receptive for that kind of relationship. I think Asians are always open to that kind of sort of contribution from the industry, but I think if I look at environments like Africa, where a lot of that is still emerging and they are sort of getting a bit more mature from a supervisory perspective, they get a lot of their leading regulations from the East and also from the West. So I think the regulators are less receptive to that kind of partnership. However, they acknowledge that there is a need for the industries to still work together, exchange ideas, whether it's tools and techniques that attackers use, and just sort of at a very generic level, being able to share amongst banks what is happening at that level, so that another bank can avoid going into a fraud because of a similar technique being used by organized criminals. Then that's something that I think we are seeing more of at the moment.
I think we saw that as an example. Just to add to that, I don't know, how much exposure you had into the effective customer warning sort of scenario, where again, trying to save customers from fraud scenarios, but again, partnering various banks, sharing, saying here's the kinds of threat models that we look at, or saying here's the kinds of scenarios to happen, and here's the kinds of interventions you can put in place to warn customers.
Yeah, I think the other part of that is, in terms of, we're talking about the relationships between firms and regulators, is people in terms of the regtech industry. So in terms of we're all trying to support our kind of customers in minimising fraud and minimising cyber security. The regulator wants the same goal, to make markets work and support consumers. And I guess the guys in terms of offering those services through technology and regtech, I'd be kind of keen in terms of, I suppose, for people who might be involved in those firms, how much airtime do they get with the regulator? Because I think it's important that we have that collaboration between all three kind of parties. I know in AML and financial crime, there's been a lot of kind of movement there, and the regulators involved a little bit more. But I wonder, going forward, that would be something that I'd personally like to see, so that we've got all parties around the table in terms of how that's connected up.
Yeah, well, I think there are we were talking before the session about possible fora for those kind of discussions. But one thing, if Africa has been, as you put it, playing catch up in terms of regulation, one area in which Africa has been out in front, particularly East Africa, has been FinTech.
Yes.
You ask, certainly if you go outside the experts in the financial services sector, if you ask a typical Brit on the street what they understand by mobile banking, they would say, well, basically accessing my bank account on my smartphone. Yeah. That's not the answer you would get in large parts of Africa. So I wonder, to what extent can we learn from Africa, and generally, how do you think cyber tech solutions can help organizations?
Yeah, it's quite interesting that you've picked East Africa, because I come from Kenya myself, and one of the largest sort of product that is out there on payments is called M-Pesa, which just means mobile money. And this is a solution that, a lot of the unreached sort of banking typical customers use on a day-to-day basis. My grandmother, for example, will go to the shop and buy groceries using that application. It doesn't really rely on internet, so it's on a SIM-based application, and which is quite rudimentary, but if you think about it, it delivers that service sort of real time to any person that requires it. And the regulator there actually has put some requirements just around security for the provider providers for that, because I think they call it Silicon Savannah. All the technology, sort of the development that is around that, but just to make sure that these secure coding practices also being followed along the way, because as long as you have innovation and you're innovating into sort of areas which have not been tapped into or they've not been reached by more mature frameworks, then there's bound to be an attacker somewhere who's learning some of those techniques and going a few steps ahead of you. So things like identity theft are quite prevalent, unfortunately, but some of those providers are actually addressing that. Standard Chartered, for example, we actually partner with those telecom companies to provide those kinds of services over and above mobile banking.
So if you have an organization like M-Pesa that operates you entirely, I was going to say online, except it's not quite online either. It works through the phone network. So how do you think cybertech solutions can help a company like M-Pesa, can help the more traditional financial institutions in London, Sydney, New York, wherever? How do you think they can help them enhance their cybercrime compliance solutions? How do you think technological solutions can help them combat cybercrime?
Yeah,
Stop
I
it.
think I'm quite happy to see some of the providers that do things around machine learning within the audience here, because those are some of the techniques that they can use, because this is big data you're talking about, where you have billions of transactions, billions of records a day that you have to go through just to identify where the fraud patterns are. And the only way you can do that is through machine learning and artificial intelligence. So I think for ourselves within Standard Chartered, we're exploring that, but from a compliance perspective, just looking at how sort of that sort of customer data flows and user behavioral analysis for sort of our front-end services within some of those markets. But from a back-end sort of compliance perspective is also looking at how we can replay the similar messages that we are communicating to other regulators within the wider group, and making sure that we have that consistent message. So I guess back to M-Pesa specifically, I think it's just being, those providers at the moment are really at that forefront of putting in solutions that can enable them to look at that demography and some of the patterns that are quite peculiar. I think the CEO of that company used to say that that product has created very peculiar habits within the society, because it's something that is still maturing and people are taking it. I think it's almost 80% of the population now that have that kind of service, versus about 25% penetration of banking accounts within the populace.
I think just on that, I think I totally agree. I think on that side, in terms of those technologies that can use AI and become forward-looking and preventative, but in our organisation, something that we're constantly trying to strive to do is in terms of actually be, risk and compliance traditionally in terms of it was what happened last month, what happened last quarter, and actually what we want to say is we want to be sat at the table predicting this is what we think is going to happen next quarter, because we've got the intelligence behind it and the data. So I think that there's two elements. I think there's the sort of the back office second line function, where an organisation of our side, we can have this ecosystem of technology tools and people that we best use in that resource to say actually we're monitoring the horizon, we're scanning the systems of the infrastructure, of preventing that with a team of 2 or 3, because we've got these sort of discrete technology tools that are working as well. I think on the front end of it, with the consumer side, it's building those solutions that integrate into the product. So actually we're using data that we're already capturing as part of that product journey. We're not then having to say to be apply for our bank account in terms of you've now got to answer 14 questions and sat at your app for half an hour. It's not going to work. So we need to have that integration where the data points that we have now and the machine learning in the background gives us that intelligence and confidence to say actually we know this is a good customer, we know this is a bad customer, we know this is a fraud rate, and support customers in terms of alerting them to your kind of point around actually this is going to happen, and we're preventing and giving their financial wellness a real strong kind of benefit, because it's at the end of the day, we will lose out as banks and financial providers in terms of the fraud costs, but actually the distress and pain that customers feel because they've been through that exercise, I think that's a really important part that we prevent that as well.
I would ask Vinita for your view on this, but I'm mindful of the clock. So if I could ask you instead, as you described yourself as the first line of defense, how in your view, we've seen that data protection regulations have got stricter over time, GDPR being a high-profile one, but by no means the only one. We've seen banks being heavily fined for data screw-ups. So, in your view, how have these stricter regulations, have they increased the need of cyber insurance to help compensate victims and retrieve lost data?
I think there would be in terms of the cyber insurance aspect, but I would probably go one step before, because the idea is to keep shifting left, right, to prevent rather than, of course, to insure and to stay safe. But the idea is to totally understand and educate, I would say, the population across to understand what is the classification, what's personal data, what's not, where does the data sit, how is the data protected, all of that. And ensuring, again, going back to the governance thing, you've got all your data approvals in place. So whether it's your data protection officer and your requirements are kind of met from a governance standpoint. Because if you go back to where you're saying, we could be fined, the 4% turnover, GDPR requirement, but it's also not just one that the data needs to be protected, but also saying how are you able to demonstrate all of that. So the demonstration of it is equally important, as I would say, not just protecting the data. The other part then comes is the global aspect. So when you're managing your data, or whether you're managing it on-prem, or you've got the cloud aspects to say where your data actually sits and what you're required to have where. So there's so many angles to it, I would say, that we need to constantly think of and proactively keep working on. Other things such as, making sure data is destroyed in time, if clients request for their information, subject access requests are met. So just there is so many aspects and attributes, masking, encryption, the various bits that needs to be thought through right from day one as the journeys are being designed. I think that's really important. So yes, the insurance bit, clearly yes, but that is just that last step in that road, I would say.
How does a bank the size of HSBC deal with a subject access request? If it's Aunt Agatha with her single account in the St Mary Mead branch, assuming HSBC still has a branch in St Mary Mead, but that's another matter. That's fairly simple, but if you have a major corporate client who could have several accounts in 5 different jurisdictions, how do you deal with the subject access?
I think which is where I was talking about earlier. It's about the efficiencies and the models, right? How do you set it up for a complex bank? So as you were saying, there's from the customer's viewpoint, it's still one bank. From the customer's viewpoint, it's still one request, and it needs to be met, and which is why you need to have certain units to say, okay, this is my niche and this is my expertise. And how you would deal with it is literally if someone came here and said, I need something from 5 different rooms, then someone needs to be able to go collect it from the 5 different rooms and get it to the customer as one unit, right? So that is that back-end complexity where we've got to meet the reg requirements, but still be able to meet that in an efficient manner. Do you see? Because you don't get away with it just by saying, oh, it's complex, it's going to take us more time.
Well, no.
You can't get away with that, right?
Exactly.
So it still needs to be.
That's why I asked, say, well, it's very difficult, isn't an option, you've got to do it. So that's why I was getting at, how do you do it?
It's how do you do it is you have the back-end processes in place. So how do you do it is when you're, let's say, launching a new product or a proposition like Kinetic as well, I have to consider saying, okay, I want to launch a separate product, or a separate kind of proposition to the market, but it still needs to fall within that same request. So how do I integrate my back-end process with the rest of the bank's process so that everything can be done in one shot? So like we could say, okay, we're trying to create something agile and fast, but do you see what I mean? So in the back-end, the engineering still has to be plugged in, because if I am the regulator and I say you are a part of the same brand, legal, it's the same request, it's the same requirement needs to be met.
And that's where technology, I think on the data subject access request, that's where technology massively help. Would you want, why would we have 100 people processing these when we can have technology can do it? I think what kind of, GDPR and these kind of data security regulations and getting that increase up the board table on the agenda is because in terms of the level of investment, that was always there, that data subject access request, but actually the investment case for it was kind of, would rather spend our money on something else. Now it's got, in terms of, we can see that's increased in terms of the ESAR perspective. I think the other part, just talks on data security, is the reputational risk. from a consumer brand perspective, consumers we know now in terms of before purchasing the product, they'll do their research, they'll look at reviews, they'll look across everything. And if there's been a data breach, if there's been something around data security, actually they won't entrust you with that data and they'll move on to your competitor. So I think having that there in terms of the GDPR fine risk is kind of there, but I think it's more in terms of reputation risk, which the board carry, the CEO carries, and actually do you want to be the one at your organisation has been hacked or been caused a data leak?
Absolutely.
That's a key metric we had in a previous organization is the net trust score, right?
Yeah.
Because you can fix your systems. What are you going to do about trust?
Correct, yeah.
Can't force someone to start trusting you again.
Linked to all of this, how do you think the data protection regulations have changed the priority list? Well, I would say that's a leading question. I would ask, do you think they have?
Of course, yes.
And in what way?
In what way? It's the seriousness, right? It's the seriousness of the matter, because suddenly when when you see the fines, you see the impact of it, then it's not just saying, okay, this is a nice to have. This is really important because when things go wrong, they can go horribly wrong. Then you see where they do go wrong in other organizations, and then you have the next level of seriousness to say, can we do a read across? Right, so this is what happened in X organization or Y, and I don't want to name anyone, but so this is what happened. Are we sure? We don't have that. There's no skeletons in the cupboard. Can we have a look at that? So that seriousness comes from seeing where the attention is across, I would say globally. Frankly, if you're a global bank, you need to think of it globally, right? And if you're saying how else it has changed, it's in terms of budgeting or project prioritizations and things like that, right? It becomes more serious to say, okay, if I want to land this, however agile I want to be, these are must-haves that are not for negotiation.
Yeah. I think from my perspective, it's caused a lot of organizations to structure their risk management differently, because now that it's mandatory, the supply chain management have to think about personal data, data quality, risk management from a technology perspective have to think about personal data. If you think about it also from a legal perspective on the rights that are shared, I guess, between the processor entities, which are your third parties, and the controller, which is the actual bank. Some of those nuances now have come to the forefront of decision making around risk management and risk reduction as well. Because before, maybe where personal data might have been rated a little bit low, maybe medium or low, but now it has to really come up at the forefront of critical assets. And that drives prioritizations of any investments that are required to protect that kind of data. So just a slightly different slant from what was shared by Vinita. Thanks.
Yeah, I think I agree. I think it's a timing kind of perspective, because I think the GDPR and regulations and the increases for large organisations and the fines have come at a time as well, at the same time as consumers becoming more vocal in terms of what they want from a product and what they expect from a business, as well as then businesses realising and enterprise value being affected by the quality and level of data that you have in terms of whether that's on consumers, whether that's on how you perform, whether that's in your analytics. I think that that sort of perfect storm in a way of all those different elements has just obviously raised it up the agenda.
I think I'd like to add to that point, absolutely. Is that, so besides the organization and the impact, but customers are so aware now, right? Yeah. And also they're willing to trade their data for a better service. So they're, Alexa's listening to us all the time, right? And we're okay with that, right? Because we know that this is what we get in return. So it's about saying, okay, what's my data? Where is my data being consumed? I mean, we're practically sharing everything of our lives on social media, but people are doing so knowing consciously because there's something that they want in return, right? Yeah. So it's about informed choice, really.
Okay, we've touched a few times on the fact that there are different sectors, there are different jurisdictions out there. Do you think we've reached the point where we need standardized regulations on cybersecurity? Either in terms of general products, but also something we were discussing in the pre-meeting yesterday. We were talking about the growth of crypto assets. Certain financial institutions don't accept crypto assets. Many do. We see from the Financial Conduct Authority, they say most crypto assets aren't regulated. If you invest in them, then there's a serious risk you lose your money. other jurisdictions, at the other end, you have Japan, and saying, well, we consider Bitcoin to be legal tender, and you have a whole spectrum in between.
Yeah.
Do you think we've reached the point where we need standardized regulations? Again, the last point from me before I use up the rest of the time is we've seen FATF and regulators say, well, we need standardized AML regulations on crypto, but the rest is up to you. Do you think there needs to be standardization?
I think it's a dream, to be honest, because I don't think it will happen soon, just because of the political nuances that you have across the different countries where some of these regulations are issued. You know, places like China where they really want cryptocurrency to continue, but they're quite hard-lined. They don't want it. Or if you look at the US, where they had a very tough start at the beginning, where they were against cryptocurrency, then eventually they started to warm up to it, and they actually put
against it. They simply said their securities.
There were security issues. I guess because of cybercrime. I think it was seen as a vehicle of liquidity for cyber criminals. So the DFS, for example, now are a bit more coming to the space where they're setting up some requirements which will facilitate banks to innovate. Because they recognize, especially after COVID, that we need to move into a cashless society, and crypto is and the bigger technology, blockchain, is a product and a technology environment that allows us to do that. But if you look at the UK, for example, FCA put out some requirements at the beginning of the year, stating that they prohibit retail, let's say, customers from being sold for any crypto trading assets and so on, without any risk management and training being done by some of their providers, because they recognize that there were quite a lot of people who lost money. So moving into the cybersecurity side, then we're almost recipients of all that noise that is going around some of those regulatory conversations, because if you look at the technology itself, it's quite secure, right? It uses certificates, it's cryptography based. That's the whole point of why it's so popular today, is that people are really looking to capitalize and monetize that into e-commerce. So when we see the e-commerce sort of monetization come in, then I think there will be standardized cybersecurity requirements now coming at the forefront. But before that time, where, for example, Amazon can allow you to buy any product with cryptocurrency, I don't think we'll get to that point quite quickly.
If I can stop you there just for reasons of time. James, what's your take on this?
I think be careful what you wish for, I suppose, is one angle for me. I think I'm a big believer in principle-based regulation. And I think in terms of us having the ability to make our own decisions, promote accountability through kind of risk-based approach, what's right for our kind of organisation. And I think if we're talking about sort of global consistency on a principle of what's kind of right, I agree. I think if we go down a kind of global framework one, I agree. I don't think it'll be achieved anyway. But even at a UK level, I think we risk the approach of kind of box ticking compliance as opposed to it being actually what's the right kind of thing to do. So principle based, yeah, I think we all want to understand and agree what's right, and we can agree sort of the number of things on that. Going too granular, I think, is a bit kind of dangerous.
Benita?
I'd agree. I think it's utopian, kind of saying, okay, we're going to all go consistent, because some of us are getting really encouraged. But you see with China, they're actually having to close accounts and off-board customers. So when you really think about as a bank or as an institution, do you want to do that? You want to land yourself in a situation where you've got to now start closing accounts and sorting all of that. So I would just say that it's a very hot space to see, and also different people are getting it. Like when we're talking about the high street retail customers, I mean, you saw these adverts in London Underground that had to be removed because they were misleading. So I saw them all over the place. Suddenly they all cropped up, and I don't want to name the firm or the brand, but suddenly they all vanished because the risk warnings were not clear.
And most of the audience take the Underground anyway, so they'll work it out.
So I mean, I'm just like from a financial institution perspective, you've got to be really clear on the warning and the messages, but also the implications of what you're going into, because you might find yourself then, with massive remediation sitting at the back end.
Okay, well, thank you. Our time, sadly, is up. There's plenty more we could talk about on all of these questions and more, but time, sadly, has run out. So it remains to me to thank all three of our panelists, to thank Vinita, Ibrahim, and Ryan. for your perspectives. Thank all of you for coming to this session. I think we all recognize this was a challenging session in terms of time. So thank you for your attention. I have been monitoring the iPad and no questions have come in. So just leaves it to me to thank you once again and thank our three panelists in the normal way.